Okay, let's go ahead and get started with the stock market technical analysis. We're going to go ahead and look at the broad markets. I haven't seen too many individual trade ideas. The markets have been trading really based on broad-based news. Today we had the CPI come out, so it's kind of everything is up right now for the most part from what we're seeing. Everything's pivoting around interest rates. So interest rate sensitive, interest rate sensitive commodities, interest rate sensitive stocks. That's what's moving right now based on the CPI. And so we'll go ahead and look at that. Triple Qs. So the other day in the private group, I talked about how we had this downtrend line right here. All right, you can see down, several reactions there of that downtrend line. We broke out, we back tested, and it rallied right there. I couldn't, at that point, there's literally nothing I could say about triple Qs that looked bearish to me. The fact that it broke out, did a clean back test of that trend line, and then just pretty impulsively rallied off of that was one of the reasons why that post that I put out said, guys, there's no way to make a bearish case right now, so I don't want to be short on the triple Qs. Today, obviously, with the CPI coming out basically better than expected, we're seeing a gap up and more rally in the tech stocks. They're very interest rate sensitive, tech stocks typically. So if interest rates are going to be coming down, then you will see these tech stocks rally, and that's what we're seeing. So again, no reason to be short, and there's no reason to be short on these tech stocks right now. There's no reason to short either. So that's kind of how it goes. Now, again, I remember I started shorting right here, or actually, sorry, it was right here on Friday the 3rd. We rallied up a little bit into that trend line, and it was an objective short right there at that resistance line. But when it broke out and then when it broke out and had that back test, it closed right here, but the gap up on the following Friday was just the reason why it didn't look like there was really any objective way to short. So I had to let that short go, about a percent loss on that triple Q short. And, I'll take those all the time. We were at major resistance, and, I want to short at resistance, and they don't always work out, but ultimately that was the reason to get out of the short. So we took the 1% loss, and I'm not long, I'm not short. I mean, you could have gone long, obviously, with the breakout. One of the reasons why I didn't really want to go long yesterday or the day before on triple Qs, if you look at the SPY, which is a little bit more evenly weighted, you can see here on the SPY, it was at its downtrend line resistance yesterday. So you can see there, resistance, and then resistance right there. Gapping up today on that CPI report. So that is a breakout, unless they fade this thing, and that's possible. Maybe they fade it. It'd be a pretty strong fade. I don't think it's likely at this point, but if they fade it, then obviously that would be a false breakout, and that would be something to watch. But as of right now, it looks like a gap up, pretty impulsive gap, and continuation to the upside. So as far as I can tell, we have some minor resistance, but I would really look at probably this most recent high here as your next level of resistance, right up here at about 459. So we'll watch that. There's other things to kind of keep an eye on, but that is a breakout on the S&P 500 as well. Okay, and everything is interest rate sensitive. This is actually probably the most important chart that I'm looking at right now is this TNX, the 10-year Treasury. So this... All right, if I look at the daily, this is going all the way back to your COVID lows. Support. All right, we've got lots of reactions to validate this as a upward trend line in interest rates. The last couple days, and while trading has been kind of choppy the last few days, because we've been really trying to hold that trend line, today, unless there's some massive recovery, this looks like a breakdown. All right, right there. That's a sell signal, essentially, from what I can tell, as of this morning. That looks like interest rates have now broken that upward trend line, and they're likely going to continue to come down. So here's what we'll want to look at. The bigger picture, you really have to go down to the weekly chart on interest rates to get the bigger picture. Here's your downward channel going all the way back to 1981. Lots of reactions validating this trend line. COVID right there, we broke to the downside when the Fed, basically was stimulating demand by all the money printing. And then since COVID, we've been in this upward trend line right here. If I roll out, you can see there's your weekly. Now, this is a weekly chart, so obviously we would need to close the week with a breakdown, but we'll start with the daily and take it from there. If we continue to break and this actually holds as a breakdown, then I can see us coming to the top of this channel. So there it is right there, the top of that channel. And that would mean interest rates they got a ways to fall to get down there. You can see that means that basically we could have interest rates come in a little bit. So again, interest rates have changed. To me, they look like they're in an upward trend line now, but trend lines don't go straight up. And this is a long time frame. Again, this chart here goes all the way back to 1981. So nothing that we really want to, bet the bank on, that we're not going to have dips and stuff in a major trend. The trend to me looks like it's up, but if we're going to break the trend here, we're probably going to pull back all the way down to about 2.65, 2.7, something like that on this on the 10-year interest rate. So that's something to look for. Again, flipping back to the daily, that right there looks like a breakdown. So that's it. If interest rates are going to pull down, then it should be bullish for tech stocks. I mean, obviously it has been so far. And especially today we're seeing that. So it should continue to be bullish unless for some reason you see the other scenario is there's just a rush into bonds because the markets are selling off. We're not seeing the markets sell off right now. So as of right now, the markets are applauding the drop in interest rates. And so we'll just expect that to continue until we see something different. All right, so let's continue with the interest rate sensitive setups. Gold. This one, gold's ripping today. Again, everything that's interest rate sensitive is basically there's not much of a play. You really had to kind of be in that play yesterday because it gapped up, but they're all just ripping. So here's gold, Newmont. So this is your largest gold miner, and this one, it still has bullish divergence. If I look out here, you can see on the PPO we've got pretty clean divergence, and then the RSI also has it as well, right there. And you can see that we made a new divergent low right here. And I did adjust this trend line. So now, as far as I can tell, I've got this bullish falling wedge on Newmont, and we just hit support. We're kind of right in the middle, so not an area I'd really want to be looking to take a position, but we'll keep an eye on it because it does look like it's got some bullish divergence on both momentum indicators, and we do have a bullish falling wedge. So ultimately what you'd want to see is a breakout, and a breakout would indicate that we're going to continue higher. The measured target for this wedge, you take the widest part of the wedge, which is about there, and then depending on where you break out would set you up for the measured target. All right, so I don't exactly know when or if we'll break out of that wedge, but if we do, then you take the widest part of the wedge, and that will give us our measured target. So that looks like a bullish setup on that one. Let's look at GDX. So GDX, you didn't really have the bullish divergence here on GDX. You made a new low. There's your former low there. And you had bullish divergence on the PPO, but you didn't really have it on the RSI here. So, mixed, kind of a mixed signals. So we'll see how the day closes on that one. But miners obviously all catching a bid. Newmont looks like a pretty bullish chart. All right, the rest, they're all kind of mixed a little bit at this point, but there are some that look better than others. And continuing on this interest rate thesis here, we've got the dollar. Big impulsive breakdown sell signal today. That's a big candle down on the dollar futures. And yeah, looks like we're continuing lower on the dollar. I don't see really any indication that down is not the trend or there's going to be a trend reversal. I see downward momentum here in the dollar. The divergence, there was a negative divergence right there that I have it circled. That was your divergent high, and now we're seeing lower lows and lower highs. So downtrend in the dollar. Should continue to be bullish for gold, so I'm going to be looking to buy dips in gold and gold miners. Not necessarily today is the day to be buying, but again, looking to buy dips. I'm going to try to look for the most bullish setups. Commodities, also kind of dollar sensitive, interest rate sensitive. You can see they're all up pretty decent. Wheat's kind of not really catching a bid yet. Wood. You've got some wood company, Weyerhaeuser, looking good. Copper's catching a bid. The grains aren't super strong, but we'll look at gas. This is gasoline, UGA. You can see we have on the daily chart, downtrend line here. We've got bullish divergence indicating a trend reversal is likely. Yesterday was the breakout. I didn't actually see it till this morning, but yesterday was the breakout. Today we're seeing continuation on that breakout. So looks like gasoline prices are going to continue to rise. And again, that's the thing. As the inflation readings come in and you see the interest rates drop, we're seeing the commodities continuing to rally, which should usher in continued inflation and continued rising prices in the future. So we'll keep an eye on that. This is oil futures. I'm not seeing anything that's really a buy here on oil. One thing that I notice is you have downward momentum on the daily chart. So there's no real bullish divergence. We do have downward price. And I don't see any real indication that trend is going to change right now. Oil looks like it's coming into some resistance right about 80.29. We've got some resistance right in here, some reaction lows right there. So we'll see. As of right now, I don't see any indication that oil is just going to rally here. I see a downward trend. All right, so Disney, that was a long trade idea I gave out the other day in the private member group. So this one had a bullish falling wedge, very similar to the Newmont setup, really. Bullish falling wedge, bullish divergence, everything looked good. And then we had that breakout. It really started to kind of break out the last couple days, and then earnings reported, broke out, ran it right up to the 200-day little pullback, and the buyer stepped right in. It's a buy the dip stock at this point. If I narrow it down to the hourly chart, you can see, and I got to kind of clean this up, but you can see that basically the buyers are stepping in when you hit any kind of trend line support. That's where the buyers are sitting at. So we're back at the 200-day. I think we'll probably pop the 200-day and go higher. Back to the daily chart here, the widest part of the wedge, the measured target of this is something like there, which sets us up for a move, I think, up to about $100 on Disney. So we're about halfway there or so. So that one still looks good, and it looks like a long to me. And I'll wrap up with Visa and MasterCard. So these financials, or at least these ones, look like they're setting up for a short trade. So Visa, bigger picture, if I go to the daily chart, I'll kind of clean this up a little bit. But I've got this bearish rising wedge right here on the daily. So that was in play for quite a while. Ultimately, we broke that wedge. That was a sell signal right there. All right, big sell signal, boom. And that came with pretty strong negative divergence. You can see that divergence was building for a while. So that, in this bearish rising wedge, that divergence was giving us a clue that, the trend was likely going to reverse soon. Look for a sell signal, and that is the sell signal right there, that breakdown. You can see you break down, we hit the 200, buyer stepped in, sold off again, hit the 200, undercut it briefly, but buyer stepped back in. We're now making a new, pretty much a divergent high. We're right in the area now where the former highs are right here, and we're right in that area today where it is a equal high, and the momentum is still lower. So what I'd be looking for, I want to see the PPO start to turn down to help confirm that divergence, and see the RSI start to turn down to help confirm the divergence. And so we could go a little higher, maybe chop around in this area, kind of pop up, make new highs, and then sell off, pop up, make new highs, and then sell off, and start to put in that divergence. If we get that, then that's likely going to indicate that we're topping out and we're going to start to roll over. Again, the measured target for this big bearish rising wedge, if you take the widest part of the wedge, that still sets Visa up somewhere down around 204-ish, somewhere right in here, which would mean that this rally here is going to get sold into, and we're going to start to roll over. So again, days like today where things are just popping up are not the days where I want to just pile in and FOMO long. It's really usually on days like today I look for opportunities where stocks are kind of popping up, making their kind of topping out, and this is where we can maybe establish a really good short position. Or on days when we're really dropping down quite a bit and selling off, kind of crashing. Those are days I look to either cover shorts or look for long positions. So not really looking to establish any longs right here, any new longs. Maybe take a shot right here. I think there's probably a little more work to do to build this divergence on Visa, but something to kind of keep an eye at. And then here's MasterCard. You can see this one popping into resistance right here at about 402-ish. We've got some resistance right in there. So I think we probably can get a pullback here, maybe down to about 389.22. I don't see any real indication that there's just more than just a pullback, but again, we'll watch. You got to watch the fangs, and you really need to see the triple Q start to sell off, and I just don't see any of that right now. There's just nothing really bearish as of today in the triple Qs that tells me we're going to have a big sell-off right now. So any kind of shorts that I'm taking, I would be looking just for pullback trades, not for longer-term trend trades, until we can really start to kind of string some other things together on the market. So I'm going to go ahead and get this one out, wrap it up, and I will catch you guys on the next one. Bye.